Welcome back, folks. We are looking at a chart of gold. Friday was a pretty bullish day, and I was able to take most of that range. I didn't trade any of the news announcement, okay, at 10 a.m. There was a trade set up on the 5-minute, okay. So we did have a set up on the bullish breaker ICT signature. So we have a low, a high, okay, lower low, and then a higher high from the news announcement. And then you can see what the market has done is on its way down. It hasn't reached the breaker, okay, created liquidity, right? And then going back up to rebalance and then come back down, taking that liquidity, and that would have been the entry for your bullish breaker setup in the last 10 minutes of the New York session, okay? And that's going up and taking liquidity, okay? I didn't trade any of this. That was a decent move up, just a bit too choppy for me, and I really wasn't interested trading at that particular time, the last 10 minutes of the session, okay? We have taken, let me go back to our 15-minute chart. So we've taken these equal highs, okay? I'm not sure if I spoke about them or not in any of my videos, but this was all liquidity, especially these equal highs here, okay, for the market to run up. I'm surprised we didn't take the equal highs above here. I think the market will reach for that next week, okay. Now, I had a couple of questions about the breakaway gap, okay. So I don't really look for breakaway gaps, but typically, if you have a bullish breaker setup, okay, or a bearish breaker setup, in this case, we had a bullish breaker setup, okay, where you have your swing low, okay, let's just make this bigger so you can see. You've got your swing low, then you've got your swing high, and a lower swing low. Then when you have the market close above your swing high, that is these last two up candles, okay? Or if it's a single up candle, let me get rid of this box so that we can see, okay? So these last two up candles, or any sequence of up candles in that swing high that was broken, okay, that is going to be your bullish breaker, okay? Or even if it's a single candle, okay, that will be your bullish breaker. Any retracement into that zone is a potential repricing higher, okay? Now, when you have that kind of a setup, we're not expecting, so there's obviously a gap here, okay, from that low to this low, okay, at that time, we're not expecting the market to get all the way back down to that low. This bullish breaker is in the way. And typically you don't want to see the market trade below the midpoint of that bullish breaker. So all this zone here, where there's a fair value gap still open, we're not expecting the market to get down to that level, okay? So that gap will remain open, okay? As I said, I don't really trade breakaway gaps. I don't even look for them, but that is when I do notice them. It doesn't mean the market can't come back down, okay? It can wick down into that level, but we're not expecting the market to go down there. In a similar manner, on a 4-hourly chart, we had the same setup, okay? Some of you were asking about how did I enter my long here when this market was dumping down, okay? And have got all this mentioned in a separate video. When this market's dumping down, let me again get rid of these lines, okay? When the market's dumping down here, okay, this is the low of the week, right? We are below Monday, which is there, okay? We've also closed below Friday New York low, okay? And we're coming to this fair value gap. That is also coming into a bullish breaker, which I haven't mentioned in any of my videos, but I'll mention it here now, so I'll just show it to you now. Okay, let's just squeeze this up. So you've got your swing low, okay, let's just see it there. Okay, swing low right there, swing high, okay, then you have a lower low with this swing low, and then obviously a higher swing high, and then as we've come back down into this up candle, I like it when there's a single up candle, then that is our bullish breaker, and we don't want to see the market trade back below the midpoint, okay, wherever that midpoint is, and so then you've got this little gap that's left open, okay, so that's the only time where I'm not expecting a gap to be closed, okay? Again, as I said, I'm not looking for those breakaway gaps, nor do I trade them, but that is where I see them the most when you have a bullish breaker in the way of any gaps, okay, that may need to be filled. The market typically leaves them open. Doesn't mean it can't come back down there and balance that out. It can wick into there, okay? But in my experience, that's when, most of the time, the gap is left open, okay? So let's talk about what's next for this market. I think that these equal highs will be taken, okay, or this liquidity will be taken. I've mentioned that previously, okay, that we will take those highs. They're pretty equal, pretty clean. I'm surprised we didn't tap into them with this move yesterday, but the market, I think, has just left it open, and we'll tap into that next week. I think these highs will also be taken, okay, so that's going to be the draw on liquidity, okay. So if we look at a higher time frame daily chart, you can see what we've done. Something I mentioned in my analysis video last weekend, which is what we were looking for, was the market to come back down into these two down candles, okay, which is the bullish order block, and that's all we've done, okay, and as soon as we've done that, the market's then pushed higher, okay. So these two down candles now are our bullish order blocks, okay. We haven't closed above the high, so that would have been nice, but we have traded above the high, so I do believe, and I do expect that next week, this will be the draw on liquidity, okay. So watch for that. Now I'm going to give you what I feel is going to be the target. This is not a trade recommendation, okay? I want you to monitor your charts, and I'll talk about how I calculated this target once we get there, okay? We may not get there. Nothing's guaranteed in the market, but that's my expectation, Okay, so we're looking at a movement up around that 2544. Let's just call it 2545. Okay, again, not a trade recommendation. Okay, I want you to learn how price is drawn, okay, to these levels, old highs, old lows, inefficiencies. Okay, also, I want you to notice what price has done. Okay, this is an important lesson about how to determine your directional bias. So here, when we have taken liquidity, okay, this was, what day is this? Let's have a look. This was on Tuesday. Tuesday made the high of the week. Okay, so at that point in time, all this liquidity has been taken. Now, I've said this many times that when the market takes liquidity, or when the market balances a level of inefficiency, then the market's seeking the same on the opposing end. So on the opposing end, the market's seeking liquidity or balancing inefficiency. So when the markets come back down, okay, it's seeking opposing end liquidity, which is these lows, and inefficiency, which is this fair value gap. Okay, so once it's met that objective, the market now is seeking the same in the opposing end, and therefore that now is the draw on liquidity. That's how I see it. Okay, now this is known as external liquidity. Old highs or lows are external liquidity ranges, and this fair value gap is known as internal liquidity. Okay, fair value gaps are internal liquidity ranges. So we've gone from taking external liquidity. This move up has taken these highs. Okay, and now the market's come back down to seek liquidity again, external liquidity, old low, as well as internal liquidity. Okay, which is the fair value gap, and now we're seeking the same on the opposing end. So that's why I believe that is the draw on liquidity. Okay, so monitor the markets and look for that. Let's jump down to a 4-hourly chart. Okay, a couple of things I want to show you. Now, let me turn on my lines. Okay, and as I said, once we reach this target, if we get there, I'll talk about how that target was established. Okay, and I want to teach you that when you have these fair value gaps on a 4-hourly chart, okay, you should use them. Okay, I love when there are 4-hourly fair value gaps, because your best setups are going to be under the low of the most current 4-hourly fair value gap, right? So that's the low end, and that's where liquidity resides. Okay, so I'm going to be looking for setups inside of that fair value gap for repricing higher. Okay, now nothing's guaranteed in the market, but you've got to have a plan. Okay, so I'm going to wait for liquidity. Okay, I want to wait for a liquidity run under that 4-hourly low, and that's where I want to see my setups, aligning it with time. And if I'm looking for a move up, then I want to see some kind of a dump. Okay, also I want you to look at this level. This is 2506.50. okay, that level there, that yellow line, price should hold around that level. Again, I'll talk about that in a separate video next week, only when and if we achieve this objective. I'll talk about how that was calculated and how this support level was established. Okay, but the key lesson here in today's video is you want to wait for the market to take liquidity, especially on a 4-hourly chart. Okay, align that with time and price, and how price is behaving at that level. If I want to see the market move up, I want to see a dump. Okay, now Monday is the most important day of the week. Okay, I'm going to show you something that I did do a video on. It's one of my shorts. Okay, been starting to create these videos that are shorter, like 1-minute shorts. This is Monday. Okay, now this Monday move down was the manipulation, because we've moved up and significantly higher. That there is the current high of the week. That is the high of the week for this week. That just gone by. Okay, we haven't taken that yet, and that's what I believe will be the draw on liquidity next week as we're starting to move back above. Okay, why is Monday the most important day of the week? Because Monday will often give you an indication of where the market's headed. Okay, this false move down, okay, is validated once we start to trade back above. Okay, so if we see a Monday false move, and you only know it's a false move when you start to trade back above it, you can use that false move to project where your high of the week may be coming in. So if I take a range projection, and I have shown you this before, okay, and project up, you will see, I'm going to just do 100% expansion, that Monday false move down has forecasted the exact high of the week. Not only that, but the midpoint of that range will often support price. Okay, so you can see the price has been supported. Okay, price has been supported. Move up, move up. Okay, so Monday's going to be the most important day, right? So watch out for Monday. What does Monday do? And then, as I said, I want to see a dump for the pump if I'm expecting the market to go higher. Okay, so this is a validated manipulation move down once we start to trade back above, and then you can project using your tools, okay, to capture whatever range that is and project it the same amount, okay, from the highs to get the exact, almost to the pip, high of the week. Okay, so start using that in your charts and just practice with it, right? Practice it on your charts, try and identify the manipulation move Monday coming, and see if you can forecast the next week's high after Monday has traded. Okay, so I've given you a few things there. Rewind the video, go back, do it on your own charts, okay, and watch this level, okay, that I've highlighted on the charts. Okay, this should hold price. Look for liquidity run below that 4-hourly low. Okay, again, this is not a trade recommendation. I want you to monitor the charts and look at how price is reacting to these levels. Okay, and then let's see if we can get a movement back above the high of this week up to this level. And as I said, once we reach above into those levels, I'll talk about how those numbers were calculated and how the support zone was also calculated. So let's watch this into next week and see how price holds and how price behaves and how price reacts from that level. Okay, and let's also see how this liquidity is taken next week. Okay, I hope the video is useful. I will now talk with you in a future video.